Welcome to Trading Lounge and the US indices for Monday, June 13. Last time we spoke, we were looking at the top up here as being wave 1, and we're looking for a move back for wave 2. We got a move back, but it's pulling back too far, so we need to have a look at a bigger count now. So we're going to remove this, and we're going to start with the NASDAQ first today, because last week we had a look at the bigger picture in terms of a wave count, and now we're going to have a look at a slightly different wave count, and then the week after, next Monday, we'll have a look at another count as well. So last week when we spoke, we were looking at from the dot-com days, all of this as being 5 waves up here as wave 1 and pulling back for wave 2, and thanks for everybody's feedback on that. And the consensus was that the pullback here was too small. So I agree with that. The next leg that we can look at next is looking at this here as 1 and 2 here, and then 1, 2, 3, 4, 5 here for wave 1 and back for wave 2. And then look at this as wave 1 up here and coming back for wave 2. So wave 2 would come in at the 10,000. And then of course last week we also looking at the market in terms of being a wave 3, 4 and 5 up here for the grand super cycle top as well. So we'll be also looking at that. So we'll be looking at a bullish count and a bearish count for this particular move here. So with the bearish move, now that we've come down here too far, we're going to be looking at this here as an A wave, a B wave and a C wave down here, counting 5 waves from wave B down to wave C, and that will bring us into roughly a bounce on the 10,000 area here. And in a way I kind of like this count because it's a NASDAQ. It's a little bit left field here, but a Bitcoin here, we're also looking from the top here as an A wave, a B wave, and then a C wave down here as well. So we've had 1, 2, 3, and we've been in wave 4 for a long time. Even if you don't trade Bitcoin, that's okay, but it's sort of the Wall Street guys are looking at it as a tech stock, and it is part of the NASDAQ group, and the NASDAQ is basically the big tech stocks, which is, also influences the S&P. So they're all sort of, everything is kind of joined in one way or another. And I think it was interesting that, and I should have noted it, that was my lesson in all of this, noting the wave 4 here and not in the NASDAQ. So that was my lesson for that. So my takeaway lesson really was that I need to look around at more markets and seeing how they're pushing and pulling off each other, and see if I can see anything. So I was a bit close-minded on that. But the point being here is that we're looking for from wave 4 going down to wave 5. Now it's possible to look at this as a triangle pattern and put the wave 4 over here as well, which changes the count a little bit in terms of what's going on down here. But we can expect it to come down further. So this, I won't go into it here though, but this low here for the Bitcoin could also be the A, the B and the C here for the NASDAQ as well. They've had the same turning dates here, here and here. And yeah, so that's Bitcoin. So let's just go to what I'll do now is I'll have a look at the bearish count while we're here. I just wanted to explain that low, and then we're also going to have a look at how I've counted that down here, because that also needs to be talked about. So before we go there, we want to have a look at the bearish count. That's considering the grand super cycle top in play, and I've got too much data here, so it's just taking a bit too long. I had to, first of all, I got the wrong one, but that's okay. We're just going to maybe put that at 2K and put this back here to where it should be on 10K tick, and we need to get in more data on that. That's okay. So just capturing the top of the market there. So last week we talked about this, and we talked about it in terms of 1, 2, 3, 4, 5 and wave 2, and then going down here for wave 1 with an A and a B and a C for wave 2, and then going down into obviously wave 3 now. when we think about this, we need to talk about it a little bit just in case it occurs, and we really want to be taking advantage of that as a trader. So this wave 3 here should be longer than wave 1 here. Okay, so that's something that we could be looking at. So that's why I've got this wave 1 roughly here. This wave 1 here is basically 61.8% of wave 1 here, because it would need to stretch out. I mean, it just needs to, you know, continue opening up to the downside in that case. So there's a couple of things here. We're also looking at, so we need to understand this little move here in a couple of different ways first. So let's just go and do that. So anyway, this is the bearish count. And I guess in one way too, this is 11,500. It's a medium levels halfway between 10 and 13. But anyway, you can see that it's important because we've got a bounce here, okay? So a bit of an unusual number. If we're going to be in a bigger bearish picture, then we could look at it like this here. So we've already come down for the bounce in 10th or 12th of May or whatever it may have been. We've had the rally, which we've been thinking as wave 1 or wave 4. And then we've had this move, and then we're in this little move down through here. So when this move comes down and finishes here, we're going to have some sort of corrective rally. And then if we're going to short it in the bigger picture, we can catch it over here. Now we're also going to have a look at shorting it in this leg here, and we'll talk about that. But what I want to point out here is just that if this is 11,500, at some point in time, it will become the resistance. The market always likes to, you know, check back and test it. Now, it may test it where it doesn't come back above the level here. So we need to be mindful of that. It could end up being something like that. So we need to be mindful of that, because it could be like this, because when you think about it, if we're in the third of the third here, you know, it might just not spend a lot of time here basically and move down. So we need to be a little bit mindful about that. But let's just go in a little bit further here. We'll just halve that. So I don't need to count that first bit, but this second bit here has always been a bit of a mystery. So let's just have a look at that. So this is where we had it before. So we're just going to put this wave C over here, and wave 2 over here, and wave 5 here, and so on. At that point, we don't need that one. And so from the top here, I can see that you can count it 2 ways, but I kind of like this wave as wave 1 and 2 here, then 1, 2, 3, 4, 5 for wave 1 and 2 here, then 1 and 2, and 1, 2, 3, 4, 5 for the third wave, fourth wave and fifth wave, and then the fourth wave, and then 1, 2, 3, 4, 5 here for the third wave, and then the A, the B, and the C here for wave 4. And then we're going down for wave 5. Now, there's 2 ways we could look at wave 5 coming down here. We could look at it as 1 and 2 here, and all of the third wave here, and the fourth wave here, and the fifth wave here. So we could end up with, if I just took it from here, we'll need to talk about this a little bit more over the days ahead, but we could probably count 5 waves here, just making a new low here and be done with it. So we'd count 5 waves where that wave 1 is. We could bring that down a bit further, and it probably will be down a bit further. We'll talk about that. We'll look at that in more detail. So we could have 5 waves from wave 4 to wave 5 here, and that could be the end of it at that point. It would still be 5 waves. But the other thing I'm thinking is that looking at stocks, if you have a look at the stock video I did this morning, then this move down here would just be wave 1 here. And then we go back for wave 2, and so wave 2 would actually be down here a little bit further in all of that, if even that. And then wave 3 here, and 4 here, and then down for wave 5 over here for that. So a deeper move down, so to speak, you know, over here for that. So there's 2 things here. This would probably be the right one here. Either way, we've got to kind of do 2 things here. We've got to as traders, there's a beginning and a middle and end to a trend. So this is the beginning in here, this is the middle, the fast bit here, and there's going to be the end. So yeah, and then we're going to get, once that's got 5 waves here, then we'll look for wave 2. So this is where we want to short it at wave 2 here, because we want to short it short it into wave 3 here, and possibly take some money off the table at wave 3 low, and then look to re-short it at wave 4 down to 5 here into that space. So the next thing to do is, well, what happens if on the bearish side of things, that bearish count, these 5 waves that we're working here are just wave 1 over here, and then we would need to go back for wave 2 over here, which would be up here somewhere. So that means that after this little first 5 waves in here, we can short it from wave 2 and go down. That's cool. Once we get these 5 waves down here, that should be the low at that point. We don't want to see it going any further than that. So we want to see it moving up at that point, but that's not up to me to decide. So what I need to do is think, well, okay, if it's going to take out that low here, then we need to be shorting that low. And if it is going to be taking that low out, we'll call that wave 1 coming down here. And then we need to short this wave 2. And this will be important at this time, because if we go back to our other chart, other bearish count, this is where this wave 1 and 2 comes in. You with me? And then we need to be shorting, because this one here this will be the third of the third of the third here. This will be really powerful at this point. So yeah, we need to be shorting it in here, but we can look at this in a few different ways, that's all. But we need to trade with the trend, and the trend is down at the moment, so we need to be on that side of it. So let's just go back to the 5K tick here for a moment and just talk about this a little bit. So just to recap this a little bit, this first 5 waves that are coming down here with 1 and 2 and 3 and 4 and 5 will bounce somewhere around the 1150, a bit lower, right, and go back for wave 2. So we want to short that in here, and then we want to be short for this, and then we'll exit down here somewhere. And then if it's going to be bullish at this point, we could probably trade it long up here, but because of where it is in the bearish count, I don't think it's a good idea. But if we get 5 waves up to the 11,500 or whatever, and then get a classic trading levels pattern on the 11,500, we will trade long from that point. If, however, we get 3 waves to the 61.8%, then we'll be looking for the short trade at that point. And it probably won't pull up to the 61.8% if it's going to be a wave 2. It may just come to 40% or something like that, because it will be in the third of the third, and then this will be the third here, and then it'll be a big drop from that point. So there's 2 counts that we can look at here, and also the 11,500 is going to play a key role in this market of being support and resistance to the downside. Let's go in and have a little look at this area through here, and the S&P is the same little area. I won't look at the S&P in the bigger picture, but we will today look at it, of course, in this smaller area here. So I want to go to 100 ticks. So we can look at the top over here, and we can look at this as wave 1 here. And in most of the markets, it seems that this is a B wave here, and then a C wave here. Not the best looking C wave, but it's okay. So wave 1 here, wave 2 over here, wave 1 and 2 here, and 1 and 2, then 1, 2, 3, 4, 5 for the third, fourth, and fifth wave here for this one, which is not finished to the downside just yet, but we'll get to that in a moment. But with the trend, there's beginning, a middle, and end, and all of this is the beginnings, where you got all the 1s and 2s, and then the third wave's in the middle, and then you'll have all the 4s and 5s finishing off here. So if you're short, that's good. You could probably get down to 11,300 if you're lucky, and then we'll be looking for the ABC pullback at that point. And this is the leg that we want to short into the next leg here as wave 3 to the downside here. So this wave 3 here should be longer than wave 1. So be mindful of that, and that can take us down to the 10 down here lower anyway, at least. So we'll have a look at that. We'll get to that when we get to that. So yeah, that's it at this point. So I don't think it's worth calling any trades in this little area here for this. Okay, now I'll just open this up a little bit here. We can see that well, we're in this wave 5 here, so we could look at this. We could put that wave 4 here. You can see there's 1, 2, 3, 4, 5 here. So that's 1 here. We'll label that 1 and 2. And then this drop here will be 3 in here somewhere, and then there'll be a wave 4 that could pull back 40%, whatever, and then wave 5 down here to finish this off. So somewhere down in, somewhere down here, a little bit lower in all of this, I'd imagine. Something, just giving it a bit of space, might even hit the 11.5 at that point. And then we'll have wave 4, which is gone way over here, so all the wave 4s can pull back to that space. So then we'll bring this wave 4 over. That will probably be a bit lower in all fairness, and this one, bring this one over here, and that will be that wave 3 there, and then there'll be wave 4 there. And where's that wave 5? They're all need to be pulled over. So this one over here for that. And so this is all just going to finish off here. It's going to take a little while, and then the market's going to try to rebalance, and that's when it becomes interesting for us as the next short trade here. So shorting that rally. So getting the timing right for this will be what we'll be doing over the next few days. We'll be just sort of focused on this, and we'll need to tighten it all up, and it may just come back to where all these wave 4s finish. I don't know where they'll finish off. They'll be in here somewhere. We'll put them just here. They could all be across the top. They could all pull back to the same length, but let's just see. We'll just line them all up, and they normally end up a little bit lower, but that's it for the time being, really. So you can kind of get a bit of a picture now of where we are. So we want wave 4 and 5 here. I got the on one wave different on the S&P, so I need to tune that up a little bit. But like I say, this area here doesn't really matter to me too much. It's really about this landing and then having the ABC here, and we may end up going further down, like this wave 1 could be on the 11,000. We come back to the 1150 and check it, and then go down from that point. But that's where we need to be on the. We need this to finish, and then we need this to try to have a rally, and then we can look to short it. And that will be the same for coming back to the S&P. That will be the same here as well. Like I'm with the NASDAQ on one wave different, so I've got to sort that out, but I'll do that. But we still haven't landed down here for this just yet, so we'll sink into this. This is sinking into group 2, so 3,650 in here, 3,650, close enough, and 37.2. There's lots of numbers in here that are important, but that's our normal standard group 2 there in this space here. So the market should find support in this space here somewhere, and then retest that, and then go down. And like I said, it's this bit here that we're interested in. If you wanted to hold short through this, because sometimes I might get this wrong here and it just keeps cascading down, So that means that if we took this and this at this point, then we could say that we need to leave any stops in the market at the moment above the 61.8%. So if you were short at the moment and you want to get through wave 2, then always just look at this 61.8% and then look a little bit higher and look for some number to be above, like the 4.1 here. That would be a nice number. Because the time that this gets down here, if we go down further here, we'll be down here somewhere. then the 61.8% will be here, or 3.8, or wherever it's going to be, and it's going to be lower. So keeping your, that's what, you know, if you're going to survive that and keep going with that, then that's what you'll need to leave the stop out of the way up at that point there, because this pullback here might not be like that. It might just be a smaller one here and just keep cascading down at this point. This is what we need to also be mindful of, but I'm sure we'll get some sort of correction at that point. And also the Russell here, it's the same as well. We need to look from the low here as an A wave, a B wave, and 1, 2, 3, 4, 5 here as a C wave. In this case, I've got it as the bearish move here, so I think it's more appropriate actually. But once again, I'll talk about the bigger picture in a moment. But this move down through here, we need to count the 5 waves down. It may come down to the previous lows here, which is normally the obvious thing to do, but we need that wave 2 here, and then we need to look at the short side here. You can short it at the moment, but once again, you'll need to leave the stop well out of the way up there, and there shouldn't really be any problems with that stop way up there, because in this case here we've got an A and a B off the low here and the C wave, so this has come way down. So for this to be wave 1 and 2 here and then wave 1 and 2 here, it's a bit unlikely, possible, but a little bit unlikely. So having a wide stop is reasonably safe at this point. In terms of the bigger picture here, it just counts quite nicely as the big bearish picture. So if we consider that the top there as 1, 2, 3, 4, 5 here for 1, and then an ABC here for 2, I shall need to lift that up a degree of structure, but that's okay at that point, as long as we know that. So because here we've also got, it's hard to count it any other way really, because we've got this as 1, 2, 3, 4, 5 here, you know, so it's a bit difficult to count it any other way rather than a big bearish picture in all of this. Yeah, so you know, with the bearish picture as well, I talked about it in the stock video a bit, but this is Berkshire Hathaway here, the A-class shares. I think that's what they, you know, in Australia you have A-class and B-class shares and whatever, but so I think that's probably the case for this company as well. But down at the .com days here, a bit out of sync from the tech stocks, but it's got the same pattern there around the 2000, a bit later. But you know, I can count here. This is quite interesting, I thought, because it's a bit rough and ready here, but 1, 2, 3, 4, 5 here for 1 and back for 2. Nice sharp move back for 2. And then 1, 2, 3, nice little 5 waves up here, and the same here. So nice 3 here and ABC for wave 4 here. And then it counts as a nice little 5 wave move up here. And then with this particular stock, we're also counting a nice 5 waves down from the top here as well. So for Berkshire and Hathaway, this particular move from the .com days has a really nice 5 wave structure up to the top. So this is one solid case for a bigger bear market occurring. Anyway, I just thought I'd throw that on the table as well. So Berkshire Hathaway and also this particular market here in terms of 1 and 2 counts really nicely, because I can't count this any other way here. That's a clear 5 wave structure here for wave 1. So it makes a nice wave 2 at this point more than anything else. I mean, I could probably do another weird count, but it's kind of this is the most sort of satisfactory count, I'd say. So there is a good case for the bearish move coming lower. So this move over here, this rally here, will become so important. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.